Hey everyone! Today, we're diving into the world of PLS shares and exploring why investors might be taking notice of this ASX-listed lithium company. Now, let's get into it. First things first, Pilbara Minerals, or PLS, is a big deal in the lithium space. They own the world's largest, independent hard rock lithium operation, Pilgangoora, which they acquired back in 2014. This means they're in the business of finding, processing, and selling spodumene concentrate, which is essentially rocks with lithium in them. And you know what? That's pretty cool. But here's the thing. While Pilbara is a pure-play investment in green tech, its revenue is still subject to the ups and downs of the global spodumene market. So, it's a bit of a double-edged sword. Now, let's shift gears and talk about the broader appeal of ASX Materials shares. Over the last 5 years, the S&P ASX 200 Materials Index has averaged a solid 6.89% in capital growth, outpacing the ASX 200 Index's 3.99% return. That's a pretty impressive stat, right? But here's the catch. While dividends are a big draw for many investors, PLS is an outlier. Over the past 5 years, it's only delivered an average yield of 2.22%. So, it seems like a rule breaker in the materials space. Speaking of rules, let's talk about growth potential. Mining is a cornerstone of our modern economy, and the demand for lithium, iron ore, and copper isn't going anywhere anytime soon. In fact, with the global shift towards renewable energy, the demand for these materials is skyrocketing. Companies like BHP and Rio Tinto are pouring money into staying ahead of this wave, and that's where PLS comes in. They're well positioned to benefit from this growing demand. Now, let's talk numbers. PLS shares are currently trading at a price-sales ratio of 12.11x, which is below their 5-year average of 20.35x. This could indicate that the share price has fallen or that sales have increased. In PLS's case, revenue has been on the rise over the last 3 years. But here's the thing, investment decisions can't be made based on a single metric. It's all about context and using multiple valuation techniques like discounted cash flow (DCF) and dividend discount models (DDM). So, what does all this mean for investors? Well, personally, I think PLS shares are worth a closer look. With their strong position in the lithium market, growth potential, and a bit of a bargain in terms of valuation, it's a company that could be a solid addition to any investor's portfolio. But remember, always do your own research and consider your risk tolerance. That's the key to making smart investment decisions. Thanks for watching, and stay tuned for more insightful content. Don't forget to like and subscribe, and feel free to drop your thoughts in the comments below. See you next time.